Welcome to Iron Vision Trading, Episode 7. Today, we review trades for week ending August 14th, 2026. So, let's get right into it. First up, we have Coin. Coin had a pretty big pullback a few weeks ago, and it's kind of been hovering around the 160 mark, and we were able to buy back our 180 call for less than $1, 70 cents, which gave us a profit of $665 on that portion of the trade. If you remember, the purpose of our short call was to reduce the cost basis on our long call, and we were able to do that by that $665. So now we need to try to be patient, look for an uptick in Coin, and then sell another call against it, this time likely out in the next monthly expiration cycle, bring in some additional credit that would offset our basis even more. Next, we have the XYZ strangle that was from last week's earnings plays. We had already closed out the expected move butterfly that did not go our way, and we were able to close the strangle out for enough of a profit to cover the losses on that butterfly. So between the two positions for XYZ, we basically just ended up with a scratch. So after that $30 or $40 pullback that Apple saw after earnings, it's kind of bounced within a $5 or $10 range over the last few weeks. So with IVR still relatively high at about 31, we went ahead and sold the 285 330 strangle for 527 in credit. Similarly for M&Q, after that recent major pullback and then recovery and some choppiness, we've been kind of flat, a little bit of a move to the upside, but we went ahead and put a strangle on. This one was the 2800 put and the 31500 call. In this case, we brought in 440 points, which for M&Q being worth $2 a point is about $900 in total credit. With AMD, back on the 11th, the stock had continued to fall, and we were able to take the call side of this iron condor off for 5 cents, so we did that. And then we rolled the remaining put spread out to the next expiration cycle and brought in about $1.07 in credit. But just a few days later, we got a pretty big rally in AMD, and we were able to take the entire position off for a $219 profit, so we did that. With the continued strength in 3M, we find ourselves tested on the call side of our strangle. So we rolled up the put again, this time from 155 to 170, and in doing so, we brought in an additional $1 in credit. So now we've collected $621 on the trade, and we've got the 170-180 strangle in the September expiration cycle. We put on a strangle for earnings in Cisco this week, and afterwards the stock made a massive pullback. We sold the 110-140 strangle for 403. And because of that big pullback, we were able to take the 140 call off for 18 cents. So now we're just leaning long on Cisco. We got the up move we were looking for in SanDisk, so we were able to take our put spread off for a $260 profit. And then the same story in Western Digital, really. We had a put spread that was remaining from an iron condor from the previous week. So with the big move up in Western Digital, we were able to close that spread out for $1.86. So we had a $196 profit on that overall trade. So that's it for trades from last week. It was a pretty light week overall, relatively speaking. Let's take a look at a few positions in the portfolio. So gold is right where we'd like it to be right now, between the 85 and 93 short strikes. If we could just hang out here for the next few weeks, we'll be in a really good spot. Intel actually has also been cooperating. It's moving towards our short strikes of 110, but it hasn't blown past them, and it's actually been pretty conservative. So you can see we're only down 10%, on this trade now, but that's a lot better than it had been. So it would be great for Intel to continue slowly moving towards 110 and then hang out there for a few weeks. And if that happens and I'm able to take this position off for a small loser or maybe even a small winner, I'm very likely to do so. This is one of those cases where we're no longer playing for 50% of max profit or anything like that. If we can take what otherwise would have been a massive loser and turn that into just a small, manageable loser, that's a huge thing for the portfolio. With the way we trade with high probabilities, we expect to have a lot of winning positions, and we also expect to have a few go majorly against us. So anything we can do to mitigate those otherwise really large losers and make them more moderate is going to be a huge boon for our overall P&L at the portfolio level. Not much to say about McDonald's other than it's doing exactly what we asked it to do. It's at about 49% profit right now, so we're right at our profit target. Barring any crazy moves in McDonald's next week, we'll be looking to take this one off. Netflix is another where I'm getting some stock accommodation, so we're getting that continued move to the upside, which is really helping our short put that was vastly underwater. This is another one that was a huge loser for a while. So instead of selling a call against this, as I did in gold, and perhaps jump the gun a little bit, I think I'm just going to continue leaning long in Netflix and see if we can't continue this rally to the upside and maybe just get out of this position altogether. Here with the call side of this Palantir Iron Condor, the stock has just maintained its move to the upside. It's kind of stabilized now at about 170 or 175, so I do expect we're going to be taking max loss on this position. That is, the Iron Condor will go to max loss, which is about $300, but we did sell that put spread as well for earnings, so overall between the two Palantir earnings trades, I think we're going to be down about $100. So we've had that continued strength in SpaceX, which is fine, but we are getting a bit of a pullback now, which actually for us, because we have that 135 call strike, we'd really like to just see the stock stay right here where it's at. That would give us the best opportunity to sell another call and maybe even sell that at a higher strike here in a couple weeks and allow us to reduce our cost basis even more on this trade. And finally, our XLE position is taking some heat as the energy sector continues to be strong. We're starting to flirt with our short strike on the call side now. So next week, I'm going to be watching this closely. If we continue to get a move to the upside, I may go ahead and roll it out to the next expiration cycle and perhaps see if I can recenter these strikes a bit. But when I do so, I'm still going to be looking to bring in additional credit on this trade, and that further reduces my risk on the position overall. Well, I think that does it for this week's episode of Iron Vision Trading. Thank you for being here. Thank you for watching. Y'all take care.